let's talk about the PCE inflation data and just how much it is a significant player in the market path going forward.
Well, the Fed is looking at that, obviously, and so, all my clients have to look at what the Fed's thinking because that's how they're making decisions on how they invest. What's really interesting is that consumers have been extraordinarily resilient this year. You're seeing that 50% of U.S. Consumers are actually in the top 10% of income earners. So that's why you really haven't seen this huge drop-off, I think, in consumer spending. And so I think that'll continue because if you look at what Fed Chairman Powell said this week, they really haven't seen any massive unemployment data or employment data. They're not hiring, they're not firing. And so that's kind of like going down and trickling down to investors. They're staying in this market. S&P 500 is up 12% year to date, and they're not going anywhere.
All right, so if they're not going anywhere, they're staying invested. There's also cash, a lot of it, on the sidelines right now. What gets that cash off the sidelines, and where exactly do you think it would go? And where would you put it?
Yeah, great point, Dom. $10 trillion is right now in money market and cash around the country, and a lot of gold. And so what's going to get my clients off the sidelines when I talk to them every day is a little bit of certainty coming out of Washington, the executive branch specifically, around tariffs. We haven't seen since March and April anything really productive happen with our major trading partners. So U.S. companies and U.S. investors are waiting to see what's going to happen there. Until that is solidified and solid and there's firm plans on paper on the books, you're going to see investors act like this for the foreseeable future.
All right, so if in that construct and that kind of a state of play, you are still then putting money to work every once in a while when people do deploy that cash off the sidelines. What exactly are they putting it into, and where are you putting them into?
We're looking for things that are going to happen. So right now, interest rates are going down. Large cap financials typically have done very well in low interest rate environments. So we're going to the banks and we're staying in the banks. They're also a great tech play. Many of them are using AI. I know our firm's using AI in a major way. All the large banks are doing so. And so that's going to increase efficiency, profitability for the long term. Also looking at things that are sectors that are not specifically tariff sensitive. Communication services, a great play, I think, not really related to tariffs, specifically in the U.S. And you're also seeing possible utilities, especially with a lot of these nuclear companies going to be servicing data services and the AI expansion. We're looking strongly into those as well.
And do you have a favorite stock play right now? What's on your radar in terms of what you think is going to be the best positioned rate?
For us, it's more the same. SMH, the semiconductors up 32% year to date. Don't really see that slowing down. Demand is off the charts, and you're seeing companies across the U.S. that are in that space continue to outperform. You look at the earnings as a perfect example.